If you are looking for a merchant account, you probably applied and they deny your application. And to this conversation, I really want to explain to you 5 reasons why your merchant account was denied. So here's an overview I want you to pay attention to. First of all, processors don't want to deny you. You have to understand this is business for them, right? Because if you are actually choosing them to process your credit card transactions, they're making money, you're making money too. So they do not want to deny you. It's one of those things where it's business for them. So make no mistake, credit card processors want nothing more than to approve your merchant account application. Every person you interact with is trying to activate your account as soon as possible so that they can begin to collect a percentage of your credit card sales, right? Payment processors get no satisfaction out of denying your application. If anything, they waste more time and money on a failed application than you do. So as a result, you need to understand, and it really takes a lot for a merchant account provider to tell you that they cannot serve your payment processing needs. It's one of those things where you have to understand they actually they have committed a lot of resources, not only financial but also human, in sort of studying your application. So if they deny you, they're losing money. So it can feel really insulting when you get denied. After all, who are they to turn down your business? And providers often make this decision because either they got the wrong impression of your company or there is a factor that forces them to turn down your application. So it's one of those things where you have to understand when we talk about credit card processing, we're speaking, anytime you're talking about money, you have to think about AML. You have to think about a heavy load of regulations, AML, anti-money laundering, the regulations, and also there is a whole force, if you will, from regulators that really compels those providers to think about KYC. KYC means what? Know your customer. So they have to do some due diligence to have more information about your business, to have a clear idea what you do, what your business does, and what kind of credit card transactions or debit card transactions they are going to help you process. You need to understand. So in today's conversation, I really want to help you spot potential red flags that are forcing processors to deny you. So you have a clear idea of things that you can do beforehand so that your application gets approved. So let me talk to you about the reasons why your merchant application may be denied. Number one, you have poor personal credit. You need to understand, credit card processing is a division of the banking industry where personal credit history really matters a lot. Okay. In fact, a merchant account is actually considered to be a line of credit by the bank. This is how they actually think of it. So a line of credit is basically a credit product if you think about it. So this is because the bank pays you before the actual money from the sale is collected from your customer. Essentially, the bank fronts you the money and then gets reimbursed when the customer pays their credit card bill. And if you have bad credit, it is basically a signal to a processing bank that they may have trouble collecting from you if there are any problems with your sales, such as chargebacks and fraud, right? And again, when we talk about bad credit, we're speaking about anything below 579. So if we're speaking, and again, I'm talking about bad personal credit, okay? Poor personal credit. So anything below, if your FICO score is below 579, you are considered in the bad credit category. So the bank will look at your application, I would say, disfavorably or unfavorably. So now, what can you do really? If you think your personal credit history is getting you turned down, you may want to consider bringing on a partner with good credit who can apply for the merchant account. So this is totally possible. It's kind of similar to like if you were applying for a loan or personal loan or a business loan or whatever, you can have a cosigner. And so that cosigner will sort of beef up your credit score. I mean, that cosigner will not beef up your score, but the cosigner will actually beef up your application. Okay, you can also offer to put down cash reserve, which actually provides the bank with collateral against potential sales issues. And so if neither of those options are available to you, then you might also consider contacting a provider from that's basically applicable to your industry or your geography. What we tell our clients to do is to actually go with the bank, for instance, Chase, that with which you already have a relationship. So sorry about this, let me drink some water here. So What I was trying to say here, thank you. What I was trying to tell you is that if you think your bad credit could be a problem, could be an impediment to your merchant account application, consider going with a bank with which you already have a relationship. So that could be really helpful to you. Boss, I want to quickly remind you of today's topic. We are having a conversation about 5 reasons why your merchant account application was denied. Reason number 2, your business operates in a high risk industry. So the thing is that going back to what I told you about the AML and KYC, know your customer, and the whole regulatory burden that revolves around the merchant accounts, you need to understand that if your business operates in a high risk industry, this is a very common reason for denial. The fact is that some industries attract a large amount of consumer fraud and chargebacks. And credit card processors prefer to avoid processing chargebacks because they leave processors temporarily exposed to financial losses if they are unable to recover the chargeback amount from the business. Additionally, federal regulators are beginning to sanction processors for knowingly or negligently facilitating fraudulent payments. Okay, so several industries, such as those related to cannabis, you have nutritional supplements, you have weapons, you have adult entertainments, and others are considered to be high risk due to the poorly defined legal precedents on state or federal level. And so most banks do not want to risk finding themselves in hot water with the regulators, so they simply deny any type of industry that even resembles something with legal questions. Okay. So what can you do really? First, you want to fully disclose what your business sells prior to filling out a merchant account application. Most processors will be able to tell you on your initial call if they can serve your industry. In some cases, simple changes to your products or marketing can change a denial to an approval. So don't be afraid to ask a processor what they need to see to approve you. So if you are being told that your business requires a high-risk merchant account, so then you just want to go to those categories instead, you can actually contact, for instance, we actually have a video that explains everything. You can contact e-merchants broker, for instance. You can reach out to Payments Cloud also, or Host Merchant Services, HMS. Reason number 3 why your merchant account application was denied is that there are some application contradictions. It's really important to understand that when you think about a merchant application, I want you to think of the application as similar to a loan application, or a credit application in general. It can be an application for a net 30 account, or an application for a business loan, or anything of that nature. So when you fill out a merchant account application, you are describing your business to total strangers, while also making prediction on what your processing will look like, right? You're also giving those strangers an intimate look at your business's existing financials. So when things are not matching up with industry standards, you risk an application denial. So when we talk about your financials, we are speaking about all your 4 basic financial statements. So your balance sheet, your income statement, your cash flow statements, and your statement of owner's equity. So what will happen here is that the credit card processor will actually compare and contrast your numbers to the average industry numbers. Okay, and if there is a delta, if the delta is too huge, you risk actually being denied. So they will look at things like average ticket and monthly value. And so there are actually 2 common warning signs that underwriters look for when it comes to your sales figures. One is a discrepancy between your business type and your sales volume. So if you claim that you are selling handmade soap part-time and you list your average ticket size at $500 and your monthly sales volume is $300,000, this will raise some eyebrows, okay? And the processor will wonder if you are misrepresenting your business type to cover for criminal activity. And you can avoid this by being honest about what you sell and ensuring that your business description is as accurate as possible. And also you have to think about processing limits. So this is the other common warning sign, is to request an unusually high processing limits. So if you're starting a brand new business that requests a processing limits of $100,000 per month, your processor will question why you want such a high limits. So to avoid this, you should really work closely with your sales agent to set an appropriate limit that guarantees approval without stifling your cash flow. So you can always increase your limits at a later date after you have established a need for it. So this is kind of important. And it's one of those things where those may be little things, but they are very important. By the way, boss, I want to quickly remind you of today's topic. We are having conversations about the reasons your merchant account application was denied. The fourth reason is if your business has a bad reputation, this could really hamper your willingness to have a bank. I mean, your ability to have a merchant account. Okay, and so in addition to a deep dive on your business's financial information, processors will also take a look at your public-facing materials such as websites, for instance, advertisements, and social media presence. So they do this to compare your public image to the way you represented yourself on your application, and to find any negative customer feedback. Okay, and so gone are the days where people didn't look at social media. Nowadays, processors, they look at everything, including your Facebook, your LinkedIn, your Twitter, your anything. They look at how you represent yourself and how the public views you. If your business has a lot of negative reviews from customers, a track record of poor customer service, or an advertising approach that is obviously deceptive, then you could be turned down for an account. And again, it's one of those things where you have to understand when processors are actually reviewing your application, they're also thinking about their own reputation. So if they were to actually get into the same bandwagon with you, the credit card processing bandwagon, they risk actually tarnishing their own reputation. So in those cases, they would rather just deny your application, and then they can just save their own asses. It's really important to really understand that. So think about a merchant account application as similar to a business loan application or a business line of credit or a net 30 account. So a net 30 account application, you have to apply the same standards of due diligence, the same standard of seriousness, if you will, the same standard of granularity when you contact a processor. One thing I want to say here is that it's all about, before you do a merchant account application, you initiate one. Make sure that you clean up your public reputation, or at least your social media profile, before you do so, because they will be checking everything. Another reason why your merchant account application could be denied is if your business is on the TMF match list. You have to understand, in the credit card processing industry, there is a list that no merchant wants to be on. And so this is one of the most difficult problems to fix when it happens to you. The credit card processing industry maintains a private blacklist of business owners who have previously had their accounts terminated by a previous merchant account provider. And so this list is called the terminated merchant file, or member alert to control high risk match list. Okay. And this is kind of similar to what you have in the banking industry with the check systems, where basically it's an industry sort of database where providers actually self-report information. And so your processor can place you on the TMF unilaterally if it determines that you have engaged in fraud, racked up too many chargebacks, failed to pay merchant account fees, or otherwise committed an egregious violation of payment processing rules. So you will likely only find out that you are on this list when you apply for your next merchant account. So it's one of those things where it's basically a way for processors to make sure that they trigger positive and ethical behavior from merchants. And what I want to say here is that if you suspect that you might be on the TMF match list, just make sure that you contact your provider and ask in a very courteous way. Be polite and ask in a very quiet and polite way, professional way, if you are on that list, and if you are on that list, why you were placed on the list in the first place. Because on the same way you can be put on that list, the same way you can actually be removed from that list, not a problem. The thing is that the provider who puts you on that list is the same provider who is able to actually take you out. The bottom line here is that it's all about your reputation. We live in an industry, or we live in a world right now where you cannot actually grow a business. You cannot even run a business without accepting credit cards or debit cards. So because of that, you need at some point to have you need to have an active merchant account application actually approved. So this is why you have to really make sure that you are in good terms with processors no matter what. Let me give you a few pro tips here. So I've given you the first, the 5 reasons why your merchant account application was denied. So basically you have poor personal credit. Your business operates in a high risk industry. You have application contradictions. Your business has a bad reputation, and your business is on the TMF match list. Now, the only way to get off the TMF list is to contact the processor that put you on it. Find out why they put you on that list, and ask what you need to do to get taken off. So if your previous processor refuses to remove you from the match list, you have 2 choices. Wait 5 years until you are automatically removed, or work with a high-risk merchant account provider that's willing to process for match merchants, okay? And if you opt for the latter, then you can actually consider Payment Cloud, for instance, host merchant services, and you can also work with the list is kind of long, but yeah, so you can have Payment Cloud, you can have host merchant services, and you can also have, there's a third player that I'm blanking on right now, but you do have players who are willing to work with higher risk merchants, okay? And so, but do not give up. Whatever the reason for your merchant's account denials, you should still be able to open a merchant account as long as your business operates legally. You will need to be patient as you hunt for options, especially if your business falls within an industry on the very fringe of legality, such as marijuana products or online dating, but there is bound to be at least one credit card processor willing to take a chance on making money with you. So it's one of those things, again, you're going to have to do more research, okay? If you are in a quote unquote high risk industry, you're going to have to do more research. And if you have any questions, please let us know in the comment section, because our team has been studying this industry for more than 20 years. We have accumulated a lot of data. So we will be able to guide you. We'll be able to tell you exactly what kind of accounts might be good for you, depending on the industry you're in. And in some cases, it also depends on the states your business is located in. So when you actually send us a question in the comment section, please let us know your geography, so where you are at, so the city and state where you are at, and the industry you're in, so for us to actually do some kind of research and let you know the best player for you, the best provider for you, okay? Now, the credit card processing industry changes every single day, but it's really up to you to make sure that your business is ready when the opportunity appears, okay? And one of those things I want to say here is that there is a provider for every legal business. That's for sure. Thank you so much for your attention. I really appreciate it. In today's conversation, I'll share with you reasons why your merchant account application was denied. So I give you the overview, and then the reasons, and then finally the pro tips. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.